Asia-Pacific markets rise on Thursday, boosted by a surprise drop in US core inflation for December and strong bank earnings. A potential TikTok ban in the US is driving users to red note a rising Chinese app popular with Americans. And France's new Prime Minister takes office amid political turmoil, vowing pension reforms to revive the struggling economy. Hello, I'm Taiba Aydin with the latest business and finance news here on TLC World. Asia-Pacific markets climbed on Thursday after US markets soared on the back of an unexpected decline in core inflation numbers in December and strong bank earnings. The consumer price index increased a seasonally adjusted 0.4% over the month, putting the 12-month inflation rate at 2.9%. Core inflation, which excludes food and energy costs, notched down to 3.2% from the month before, slightly better than the 3.3% forecast. And on a monthly basis, the core measure rose 0.2%, also lower than expectations. This triggered a sharp relief rally in stocks and bonds on Wednesday, but traders and investors warn that markets are likely to remain anxious about the pace of inflation as the path ahead remains shadowed by ongoing uncertainty about the outlook for further Federal Reserve interest rate cuts and incoming President Donald Trump's actions on issues like taxes and tariffs. For more on this, we're joined by Nadia Al-Bilasi in Dubai. She's a senior market analyst at Equity Group. Hi there, Nadia. Now, the US inflation rate rose for a third time, but core CPI slowed down in December. What's helped bring down that core rate?
Hi, Taiba. Yes, I guess the core inflation did give some relief to investors despite the initial CPI actually going higher in the month of December. I guess what brought it down was food and volatile items going lower in the month of December. However, markets are trying to take that as a good sign because they're only trying to reflect the inflation numbers to what the Fed decision is going to be like in the next month. Now we're anticipating a pause. We thought that there was going to be a hike on the table, so I guess that took away from this expectation, because a hike on the table was going to change a lot of things in the market, was going to change market sentiment, was going to change a lot for earnings. Earnings have been doing so well in the markets due to the Fed doing the cuts. So I think while hikes were on the table, things were about to change. So now that inflation, the core inflation came at 0.2 less than the expectations, it provided some relief to the markets, and now we are expecting a pause for the next month. And I think that the more that we see things tied up to economic indicators, this will be reflected in market sentiment. For example, yesterday there was a lot of stock optimism. I guess stocks really took that well, and they were in the green yesterday. And also gold prices were elevated. They had their best performance in over a month. The dollar went down to its 2-month lows. So I think a lot of things have been changing, tied up to inflation data, which is headlines for 2025.
Okay, Nadia, we will come back to you in just a moment, but first let's take a quick look at some US bank earnings. Now, following the US Federal Reserve's much anticipated interest rate cuts last summer, the nation's banking sector is thriving despite challenging conditions. 4 of America's 6 largest lenders reported impressive fourth quarter profits, fueled in part by Donald Trump's election victory, which triggered a surge in trading activity on Wall Street. JPMorgan and Wells Fargo posted around a 50% jump in fourth quarter net income to $14 billion and $5.1 billion respectively. Goldman Sachs doubled to $4.1 billion, and Citi also made a significant turnaround, swinging to a profit of $2.9 billion from a $1.8 billion loss in the final quarter of 2023. This strong performance was mainly driven by a spike in trading activity, particularly in equities, both before and after the US elections. Investment banking units also enjoyed a boost as companies took advantage of relatively low borrowing costs to raise debt. 2024 was a stellar year for US bank stocks, with shares surging after the presidential election. Optimism around inflation prompted investors to shift away from technology stocks to sectors poised to benefit from lower borrowing costs. Goldman Sachs, JPMorgan and Citi stood out as the top performers, significantly outpacing the S&P 500's 20% gain for the year. Let's go back to Nadia now. Nadia, now, firstly, with interest rates trending lower and trading activity booming, is this a sustainable model for banks' growth in the long term?
Yes, of course. The more rate cuts that we have, the more that we're going to see earnings being boosted, the more that businesses are going to be able to grow, the more that small businesses also they'll be able to afford to get loans from the banks to be able to also afford growth. So, and we're also going to see that reflected in GDP numbers. We're anticipating better GDP numbers for this quarter in the US as well. And I think that the progress that has been made in terms of the trading volumes that we've seen post-elections. And I think that the Trump administration in general comes with a lot of optimism for equities because the Trump administration does support a lot of, they decrease the corporate taxes, which has a lot to do with benefiting corporations. So I think that in total does work best for corporations, which then also reflects on earnings. So I think in general, this is the path. And also NVIDIA CEO, he did say that the export chips, they're going to do better under a Trump administration. So there's in general a lot of optimism and positive talk around the Trump administration, and he's going to take office in January 20th. So I think that's going also to boost a little bit of market sentiment. There is a little bit of uncertainty. It may boost safe haven demand a little bit because safe haven demand has been dented because of geopolitical tensions being overshadowed or easing up compared with last year, how the tensions they kept on rising. So now that we have a little bit of shift on the table, I think that the sentiment is a little bit uncertain. However, there is still optimism, especially that earnings are doing well, companies are doing well, and rate cuts are still on the table. Despite the pause that we're going to see in the next Fed meeting, we're still going to see at least 2 cuts. I think this is what they said in the last Fed meeting. They said that they're going down from 3 cuts to 2 cuts, but still this is going to boost the equity market.
Okay, Nadia El-Bilasi, Senior Market Analyst at Equity Group. We'll have to leave it there. Thank you very much for joining us.
Thank you, Taiba.
Now, outgoing US President Joe Biden highlighted the suffering of Palestinians, calling the past 15 months hell. A 3-phase ceasefire in Gaza brokered in Doha aims to end bloodshed that has claimed over 46,700 lives and deliver aid. While Hamas supports the deal, Israeli hard-right lawmakers oppose it. Incoming President Donald Trump claims credit, but Biden attributes the breakthrough to his team. Ahmed Al-Shahabi reports.
At long last, the Gaza ceasefire has been shaped.
Qatar, Egypt and the United States are happy to announce the success of joint mediation efforts in order to reach a deal between the parties in conflict in the Gaza territory to exchange prisoners and hostages, and a return to a prolonged truce that achieves a permanent ceasefire between the two sides.
Shortly after the announcement in Qatar, US President Joe Biden took credit for the deal.
Good afternoon. It's a very good afternoon. Because at long last, I can announce a ceasefire and a hostage deal has been reached between Israel and Hamas.
Turkish President Recep Tayyip Erdogan has welcomed the Gaza ceasefire deal. In a statement, he said, "We hope that the agreement will be beneficial for our Palestinian brothers, our region, and all over humanity, and will open the door to lasting peace and stability." Hamas considered this ceasefire a new failure for the Israeli ruling coalition.
The Israeli criminal occupation was confronted with the steadfastness of our Palestinian people who have held fast to their land. The Israeli army has achieved none of their secret or announced goals in Gaza. The people of Gaza have been the shield for the resistance fighters. The Qassam and other Palestinian factions have proved to the world that they are heroes. They have fought to the last moment of this war in Gaza. They conducted courageous operations against the Israeli army. They inflicted heavy losses on the Israeli military vehicles, making them child caskets for the Israeli soldiers.
With the approval of both sides and the negotiating parties, working is underway to complete all executive procedures in the coming hours. The first phase of the agreement, which will last for 42 days, will witness a ceasefire and withdrawal of the Israeli forces to the east and away from the populated areas to be stationed on the borders in all areas of the Gaza Strip. It also includes intensifying the entry of humanitarian aid and its safe and effective distribution on a large scale throughout the Gaza Strip. Under the first phase of the agreement, Hamas will release 33 Israeli detainees in exchange of a number of Palestinian prisoners in Israeli prisons and detention centers. But on the ground, the bombing has not stopped. Some 20 Palestinians were killed after the Doha ceasefire announcement. And as the mediators are pushing Israel to halt the already planned attacks on Gaza, no one knows yet whether this ceasefire will hold. Ahmed Shihabi, TRT World.
Now let's take a look at some of the other top business stories from around the world. The World Bank has approved a $20 billion loan for Pakistan to tackle issues like learning poverty, poor health and climate change. But the plan faces challenges due to political divisions and security problems in two provinces. The World Bank has projected a modest 3.8% economic growth for 2029, alongside a 6% budget deficit and a 73% debt-to-GDP ratio. The German economy has contracted for a second consecutive year, the first time in over 20 years. The country's GDP shrank by 0.2% last year, following a 0.3% decline in 2023. This comes weeks before an election in which key sectors, including the motor industry, are under pressure as car makers struggle with the transition to electric vehicles and increased competition from China. Australia's unemployment rate ticked up to 4% in December, but it wasn't because of job losses. Instead, more people were out there actively looking for work, a sign that the labour market remains strong. With job creation still robust and the employment-to-population ratio reaching a new high of 64.5%, the question now is whether the Reserve Bank will go ahead with the anticipated interest rate cut next month. And a Toyota subsidiary has agreed to plead guilty and pay over $1.6 billion in a settlement with US government agencies over emissions fraud. The US Justice Department, FBI and Environmental Protection Agency, along with other agencies, reached criminal and civil resolutions with Hino Motors. The settlement marks a significant resolution in the ongoing investigation into the company's actions. A possible TikTok ban in the US has sparked a digital migration. Many users are now flocking to Red Note, a Chinese app gaining traction among American users. Lara Kılıçaslan has the details.
TikTok has been a cultural phenomenon in the US with 170 million users. That's about half the country's population. But its future hangs in the balance. Fearing a looming ban, many TikTok users are moving to Xiaohongshu, or Red Note in English. The app saw a 200% surge of new downloads, topping Apple's US App Store this week. In just 2 days, over 700,000 Americans joined the platform.
So far, we have begged our representatives, please show us what this security issue is and why ByteDance is more guilty than everybody else. If Chinese owned and run and accessed apps are a problem, why was Red Note even on? It's an even more Chinese app than the Chinese app we're all worried about right now.
Xiaohongshu is China's answer to Instagram, which is banned in that country. People share photos, videos, and advice on travel, skincare, and more. It's also becoming a space for cultural exchange between Americans and Chinese users.
Since yesterday, we have seen many new posts in English calling themselves the TikTok refugees, and the reaction from the Chinese users have been mixed. Some believe this is a great way the Chinese culture get to a global audience, while some worries this will be a cultural invasion and it might have an impact on the censorship.
The platform's rise comes as TikTok faces a January 19 deadline to cut ties with its Chinese parent company, ByteDance, or shut down its US operations. Rednote, currently valued at $17 billion, sees this as a chance to expand globally. The company is now rushing to moderate English content and improve translation tools. However, the sudden influx of US users calling themselves TikTok refugees has created challenges.
So it's kind of been a culture shock, but also in the best way possible. But it is the welcoming that we've received as TikTok refugees has been something I wish America would be more like, welcoming people in that are different than us.
Meanwhile, several billionaires, including YouTuber Mr. Beast, have shown interest in buying the social media platform to keep it running in the US. The economic impact of the ban could be significant. According to the Washington Post, TikTok added more than $24 billion to the US GDP in 2023. The LA Times also reports that the TikTok shop marketplace generates about $7 million in daily sales in the country. A ban would take a big bite, literally, out of small businesses. And the clock is tick-tocking away. Lara Kılıçarslan, TRT World.
Let's get more on this now with Dennis Kenji Kipka in Frankfurt. He's the director of Cyber Intelligence Institute. Good to have you back on the program, Dennis. Now, reports suggest TikTok added more than $24 billion to the US GDP in 2023. How significant could the economic impact of this potential ban be on the US?
Yeah, so given TikTok reported 24 billion contribution to the US GDP in the last year, a ban would likely have a significant negative economic impact. And this would also manifest through job losses in sectors like content creation, advertising, and related industries. And additionally, businesses, particularly in small, medium-sized enterprises that heavily rely on TikTok for marketing and sales, they would definitely face substantial revenue losses, potentially hindering economic growth and impacting consumer spending.
Now, both Biden and Trump have said they're looking into keeping TikTok in the US, while a number of billionaires have shown interest in buying the platform. Do you think we'll get a deal before the deadline?
I think it's not possible to get a deal before the deadline. So we had several millionaires, such as Mr. Beast or Elon Musk, reportedly others, that have expressed interest in acquiring TikTok, and their motivations are quite different. So they stem from a combination of factors, including recognizing the platform's immense user base and its significant influence on culture and commerce. But acquiring TikTok is really a complex procedure, which will also take months, and it also has access to massive audience. So also the legal regulators will have an overlook on this.
And now American users are migrating to another Chinese app, Rednote, calling themselves TikTok refugees. Just explain to us how this came about and whether or not you think this app has the potential to become another TikTok.
Yeah, so as a potential ban of TikTok looms, American users are migrating to Xiaohongshu, and this is also known as Rednote. But this is currently just a Chinese app, so it's mostly written in Chinese. And this Chinese social media platform, and that's a key factor, is popular for its focus on lifestyle content like fashion and travel. And this is why it has also seen a huge surge in downloads. And while the reason for this shift are very complex, the impending loss of TikTok and the desire to maintain connections within a similar social media environment, they will likely play significant roles. But it is to say that Rednote is not the only app. So there is also a second player in this field, which is called Lemonade, that is also owned by ByteDance. So it will be interesting to see which will be lastly the most successful app here in the app race.
Now, as you say, Chinese apps are becoming more popular. What's behind China's ability to foster an environment to build such applications?
Yeah, so it's all about trust. So we have seen that the importance of digital trust in this society and also in the economy is more important than ever. So the Chinese companies like ByteDance, they have a lot of technological power to create these apps and also to create a big user community. But on the other side, they are lacking trust. That means data safety, data privacy issues, and also, like President Biden mentioned, national security issues. And this is something that the Chinese apps will have to overcome, also including Red Note, to be successful on the American market for a long time.
Okay, Dennis Kenji, Kipka, Research Director at Cyber Intelligence Institute. Thank you very much for your analysis.
Thank you.
Now, after much political strife, France's new Prime Minister, François Bayrou, has taken office, promising widespread changes. He hopes to get the country back on track, and to do this, he's promised reforms to the country's pension system. Bayrou is facing a number of challenges that have made economic growth very difficult. Emre Boz has more.
France's new Prime Minister, François Bayrou, is facing his first major test in Parliament, outlining his key policies to get the country up and running again. This is after months of political instability that saw the previous government collapse, where former Prime Minister Michel Barnier was ousted in a no-confidence vote. One of the first major changes for Bayrou is reforms to the pension system. France raised the retirement age from 62 to 64 in 2023. This was to ensure a larger workforce remain within the economy. But this unleashed months of protests in the country.
I've therefore decided to put this subject back on the agenda with the social partners for a short time, under transparent conditions, using an unprecedented and somewhat radical method. The approach will be based on indisputable facts and figures. I'm going to ask the Court of Accounts to give us the current and precise state of the pension system's financing, and the government will communicate this result to all French citizens.
Bayrou is taking his new seat in office facing several economic challenges. One of them is the French budget. France's budget deficit after the COVID-19 pandemic in 2020 has remained between 4.8 to 8.9% of GDP. And last year, experts forecast the number would be between 5 to 5.5% of GDP. This poses a threat to the economy's growth because as it rises, the government will be saddled with larger debt. This leads to higher taxes and ultimately less for the government to spend. Already, France's GDP, though rising in the third quarter, is still lackluster, staying within the 0.2 to 0.4% range in 2024. And growth expectations for this year have been lowered from 1.2% to 0.9%. The new Prime Minister says he'll keep the deficit to 5.4% of GDP. And he also said he'll take a more strategic approach to economic stability. Bayrou is determined to reach the EU's target of reducing the country's budget deficits to 3% of GDP by 2029. For the economy, this will mean reducing government spending and maybe increasing taxes. And if this happens, France's economic growth may remain sluggish for years to come. Emre Boz, TRT World.
Joined by Vicky Price in London. She's a board member at the Centre for Economics and Business Research. Good to have you back on the programme. Vicky, firstly, what are some of Prime Minister Bayrou's key economic policies?
The main thing he needs to do is pass this budget, which of course his predecessor, Michel Barnier, wasn't able to do, and therefore he had to resign. And the pressure now is on to at least get some agreement, because otherwise quite a lot of the issues that France needs to tackle, including sort of paying its own workers, are going to be increasingly difficult to achieve. So that's a real issue for him. So he's moving to open up the main area, which of course led to Barnier not being able to get the budget through, which is really what you do with the pension side, basically the welfare budget, which of course the government needs to reduce if the government is to meet at all the targets that have been set for its deficit and also its debt to GDP ratio, which of course is increasing. If you look at the deficit, the expectation is that for the year as a whole in 2024, we might end up with something more like 6%. If nothing happens, it will get even bigger in 2025. And the debt to GDP ratio is now over 110%. And given what's been happening in the markets recently with yields going up, it may just become a little bit more difficult to even service. So that's the priority for him.
And what's likely to be included in that budget?
Well, a number of things that Barnier had to reconsider in the budget, which I think was going for something like 60 billion euros cuts, had included increases in healthcare pay costs for individuals, but of course, very significantly also, it included the pension reforms, the social security reforms that had already been announced by Macron a couple of years earlier and pushed them through, which were the main reason why the budget did not, in fact, get the overall approval. He's now having discussions that you've just been covering with the trade unions, with businesses, to see what can be done. Because, of course, again, as you reported, the increase from 62 to 64 in the retirement age didn't go down well in France. It has gone through because that's what Macron pushed to happen. But if he reopens it and there is a way of compromising, then perhaps he can get his budget through. And I think this is going to be very crucial for France. I mean, we talked about the economy and growth earlier, and I think it is an issue for them. Yes, they had a good summer because of the Olympics. Then things stalled. We saw a little bit of a recovery in November after a drop in October. But actually, it does need the growth. And given that Germany next to it is not doing well, a second year of recession, we're all looking at France as the second largest economy in Europe to start really positively recovering. And for the moment, if there is no budget and no prospect for stable economic policy ahead and stable economic growth, then that's going to be a problem for Europe as a whole.
And how will the pensions reform be addressed, do you think?
That's a very good question, because what Bayrou has been saying is that he's going to be talking to all the parties to get some reasonable objections to what is being proposed and to come back and raise it with the nation. It would be interesting to see whether he then decides to have a sort of open consultation and get views more widely. But he seems to be trying to be all-inclusive, and I think he will be talking, obviously, to the other parties to see, what compromises might be acceptable so he can get the budget through. But it's not just the pensions, but it's a wider issue of cuts, which, of course, that will mean retrenchment generally, and that's a big issue, I think, for France anyway. But yeah, I think compromise will probably be what he's going to be trying to do in order to get the budget through. Otherwise, we may have another change of prime minister happening in France, which is very destabilizing.
All right, Vicky Price, we will have to leave it there. Thank you very much for joining us.
Thank you.
Your business news for now. Thanks for watching.